Last week, the S&P 500 was negative for a change. Now, that largely came at the end of the week when Trump announced 50% tariffs on the EU because they really weren't negotiating a tariff package with the US. And so we saw the stock market respond negatively to that, despite having seen this show before, back and forth with tariffs. And I'm filming this on Sunday, May the 25th. Today, Trump announced that he had spoken to the EU and they've agreed to continue the pause on EU tariffs until July the 9th. At this time, the stock market is responding positively. The S&P 500 futures are up almost 1% at this time. If we take a look at the market action last week as a reference, we got the S&P 500 down 2.7%. The biggest loser last week was the real estate sector. The technology sector did not fare well either. It was down 3.3% last week. Now, I'm going to talk a little bit about the technology sector a little bit later. We'll go through some of the technicals and the seasonals for the technology sector and what we could expect coming up shortly. Healthcare continues to get hit hard and underperform the market. It's just been one announcement after another that's really hit that sector quite hard. If we look at some of the subsectors last week, here we can see gold was up 4% and the gold miners were up almost 7%. They're up almost 50% year to date. If we take a look at the bond yields last week, we did see the US 10-year yield climb a little bit, not that much. We saw a lot of volatility last week on the Trump announcement of the EU tariffs. We did see the yields climb at that time, but for the week they were just up slightly. If we take a look at Canada, we can see that the yields actually increased as well. And if we take a look year to date, the yield on the 10-year Treasury note, despite all the talk, is lower compared to the start of the year. If we take a look at the currency here, CAD versus USD here, we can see that the Canadian dollar gained 1.6%. We're going to take a look at that a little bit later, talk about some of the seasonals that are in play at this point. The US dollar relative to world currency was down 1.3%. Now that once again occurred mainly after Trump announced the tariffs on the EU. We saw the US dollar get hit quite hard and the Canadian dollar appreciate at that time. If we look at the graph of the S&P 500, here we can see the peak earlier this year. We saw the bottom in early April, and here we are today. Now, it does look like we might be setting up to roll over here a little bit. Here's the MACD, and we can see the last time we were at this level here, this high level was back in August of 2022. We had that cross move lower at that point, and we saw the S&P 500 move lower for the next couple months. It doesn't mean it's going to happen again, but when the market's so stretched, it can pull back here. If we take a look at the RSI, it's moving off an overbought condition. It looks like it's heading lower, and the full stochastic oscillator as well was overbought and pulling back. So we're seeing declining price momentum, which is not necessarily a good thing for the S&P 500. We could see some further softness in the market coming up shortly. I want to take a look at the technology sector. Here's the XLK ETF. You can see here that it did have some resistance here. We're not even at that level for the technology sector. But I do want to point out here, this is relative to the S&P 500. You can see here, since 2022, we really have been consolidating relative to the S&P 500. We're so used to the technology sector for years outperforming, but it has been struggling a little bit. You can see here from the April bottom, it has outperformed. It looks like it might be rolling over a little bit, moving off an overbought condition with the RSI and full stochastic oscillator as well. So right now, the technical picture does look a little bit weak for the tech sector. If we take a look at the seasonals for the tech sector, in June, they tend not to be favorable. If we go to my website, alphamountain.com, you can see here that if you click on the last tab here, graphs, put some basic graphs here for some seasonal trends. Here's the sectors of the markets, sectors in Canada, subsectors, countries, regions, fixed income, commodities, stocks in the US, stocks in Canada, volatility. I'm just trying to build this out over time. These are some basic graphs that you can take a look at. In this case, some of the data doesn't go back as far as what I put in my books as well, just as a matter of convenience, but you can compare both. But if we take a look at, in this case, I've got XLK for the information technology from 1999. And we take a look here, we can see that the seasonal trends for June tend not to be that strong. Here we can see right here that on a median and average basis, that that sector, yes, it's a little bit better than the S&P 500, but that has really been skewed by a few years. And if you take a look down at this stat down here, you can see that it's only outperformed the S&P 500 38% of the time. So the average, as an example, has been skewed by, let's say, the AI, which happened in May. The recognition of it really took place in May and June of 2023. So we have seen some really strong results skew the numbers on average. But if we take a look here, outperformance relative to the S&P 500 tends to be weak. And so we could see the technology sector, which has been going back and forth, particularly if we see the S&P 500 turn lower, we might see the technology sector head lower as well. Two parts of the market that investors should be paying attention to are the currencies and fixed income, particularly now because there's a lot of stuff happening there. And even if you're an equity investor, it's still important to follow this because it's really going to give you some clues about what sectors of the market and what countries could be outperforming as well coming up. But let's take a look at what's happening with the US dollar right now. It's kind of interesting. In white, we've got the Dixie, so the US dollar versus world currencies. In blue, we got the 10-year yield on the US Treasury notes, and they tend to follow each other together over time. Here's a correlation down here, and you can see that this green basically says they're positively correlated, which makes sense. When yields go up, the US dollar generally goes up. But that hasn't been happening recently. What we've seen is even when yields were increasing, the US dollar was going down. And then last week, we saw the yields increase again and the US dollar go down again. So why is this happening? It's difficult to tell because the data this is really happening fairly real time. It'll take a little while for all the data to come through, but it looks like when tariffs really heat up, the whole tension there, countries are re-domiciling some of their investments from the U.S. So they're selling, in this case, U.S. Treasuries, which pushes the yields higher, which we saw last week. And then they're taking their currency and flipping from U.S. dollars into their own currency, which in this case pushes U.S. dollar lower. So this is a little bit of a new world. And this is indicating that down the road, the U.S. may not be the best place forever as far as investing. We're so used to seeing the U.S. markets outperform, whether the stock markets, the NASDAQ, etc. But things could be changing here. And this is what's the currency markets and the fixed income markets are saying. Like things aren't the way they were before, and we have to pay attention to that. So I think we're going to have to take a look at investors, as investors, even in the equities, for other opportunities instead of just blindly investing into the U.S. Now, the U.S. is trying to do a lot of structural changes that could help with supply-side economics and could help production, etc. I don't want to get into that, but in the short term, investors right now are saying that's not really what they expect. So this is a little bit concerning here. Investors aren't expecting things to work out here, and that would have an impact on the stock market as well. If anything, this is saying that we could see the stock market actually be a little softer. The graph on the left here, this is the Canadian dollar versus US dollar, and I want to show you here, this is April right here. Okay, there's April. Look at the Canadian dollar relative to the US dollar. It did extremely well. The strongest month of the year for the Canadian dollar is April. We did see the US dollar actually start to gain on the Canadian dollar in May, which is typically what happens on a seasonal basis as well. And but we've seen this reversal as investors have been selling off US assets. And what we've done here, I'm just going to clear this up, is if we take a look here, we've actually broken above this level here, and here we are up at 73 cents. We can go all the way back here. It's not the best line here, but we've definitely broken resistance. We could actually see the US dollar move higher, or the Canadian dollar move higher from here. It's not like a really strong seasonal period for the US dollar. It tends to be marginally stronger than the Canadian dollar at this time heading into late June. But right now, the fundamentals just aren't supporting the US dollar versus world currencies. Now here, I want to tell you some of the major factors that I look at in trying to derive what the Canadian dollar could be doing here is the differential between the 2-year yield on the Canadian dollar versus the US dollar. And this is the price of oil. And down here is relative to world currency. So relative to world currencies, the US dollar has been moving lower. Oil has been fairly flat. And if we take a look at here, overall it's been fairly flat for the differential between the Canadian dollar and the US dollar. So this really is being driven by much bigger activities taking place, and this is really part of this US dollar just underperforming all currencies. On a technical basis, the S&P 500 looks to be overbought and it could be turning lower. It doesn't mean it's going to turn lower, but we are seeing that starting to become more likely case with the price momentum starting to turn lower. The MACD, the RSI, the full stochastic oscillator. So it's going to be hard for the S&P 500 to make further headwind here. Now, it has done extremely well over the last few weeks. A lot of that really was from short covering. A lot of retail, by the way, was pushing that. Not so much the institutionals. It was more the retail that was buying the dip and pushing the market higher. And so saw a lot of short covering, a lot of FOMO as well. But I think we're probably going to see some sort of at least a pause for the S&P 500. Now, as far as the tariffs go, like the tariffs looked like they were all being sort of worked out for a while there until Friday. And, you know, it's been on and off, and it's very difficult to tell what's going to develop coming up shortly. But I do want to say that a few weeks ago, Scott Bessent said that they were expecting tariff agreements to be announced in a few weeks. Well, now it's a few weeks and they haven't announced them. In fact, this weekend he just said, well, they're probably not going to make any announcements until July. So I think things are going a little bit slower than they expected. And in the end, I think there's still going to be some tariffs. The stock market investors are acting like, hey, everything looks really, really good here, and it's almost like they're acting as if the tariffs are all going to go away. So I do think we're going to start to see the reality set in that there will be some sort of tariffs in place here, and maybe the tariff wars heat up all over again, which is a real possibility as well. So on a seasonal basis, we tend to find the market can stumble at this time into late June. And I want to say on a positive note that starting in late June to mid-July, coming to the next earnings season, the stock market can do really well. So that's something to look forward to. But at this time, it looks like the market's really just capping out here and could pull back a bit, particularly into mid to late June. Thank you very much for joining me.